Welcome back to the Neuro Finance Masterclass. Today is day 100, a historic milestone in our empire-building journey. I'm Ibrahim.
And I'm Sarah. We're your resident financial titans, and we are absolutely thrilled to co-lead today's explainer. Today's theme? The Great Showdown, stocks versus crypto.
We're going to break down these two massive financial arenas so you can see exactly how to navigate them. We're keeping the energy super high, the strategy intense, and by the time we wrap this up, you're going to have a crystal clear blueprint for how to dominate both markets. Let's dive right in.
100 days. Just take a brief second to let that sink in. We want to congratulate every single one of you. Because you know what? You are no longer the retail prey that walked into this room 100 days ago.
Exactly. You've spent the last 3+ months completely shedding that mindset. You've been meticulously building your knowledge base, and right now, you possess the analytical toolkit of an institutional fund manager. You've put in the work, you've studied the cycles, and you've built a serious foundation.
And to celebrate this massive milestone, we're holding the ultimate financial panel right here in this explainer.
So, it's the question that absolutely dominates the financial internet. Stocks or crypto?
Right, and the average retail investor treats this debate like a tribal sports match. They pick a side, put on their jersey, and honestly just spend all their time screaming at the opposing side on social media. They actually think one has to completely destroy the other.
But let's be real, that is a poverty mindset. That is exactly how retail capital gets slaughtered. While they're too busy arguing in the comment section, the real players are making moves.
So here is the crucial point, and it's really the core philosophy of our masterclass. An architect does not choose a side.
Exactly. True financial titans, the architects, look at both the traditional stock market and the crypto universe simply as distinct execution grounds for their capital. They don't cheerlead, they don't get emotional.
They analyze the data, understand the unique mechanics of each environment, and then they exploit the inefficiencies in both to build their empire.
All right, Section 1. Traditional stocks, the regulated fortress. Let's get into it.
When you buy into this regulated fortress, you're purchasing ownership in real-world flesh-and-blood corporations. This is the bedrock of modern global finance, and it operates under very specific, time-tested rules.
Right. These traditional stocks are anchored by tangible reality. We're talking about physical infrastructure, factories, global supply chains, real estate, and on top of that, robust legal frameworks that actually enforce your property rights.
And critically, you have decades of standardized accounting data. You can pull up a company's history and run a rigorous DuPont analysis to really tear apart their return on equity. It just provides a highly predictable, mathematically sound foundation for your capital.
So the strengths of traditional equities are pretty clear. You've got heavy regulatory protection, clear legal recourse if a company commits fraud, and predictable cash flow through long-term compounding and dividends. It's a very powerful safety net.
But those same rules create weaknesses that constrain you. You're limited by strict opening and closing hours, you have to deal with slow settlement periods, and most importantly, there is massive institutional saturation.
Literally, thousands of hedge funds are analyzing every single decimal point of an Apple or Amazon earnings report. Because the information asymmetry is so incredibly low there, it's almost impossible to find a 100x mispriced asset in this highly saturated environment.
Moving right along to Section 2, Crypto, the asymmetric Wild West. Now, if traditional stocks are real-world corporations, the cryptocurrency market represents ownership in decentralized digital networks, cryptographic protocols, and programmatic economies.
This is the frontier, guys. It's entirely digital, mathematically enforced, and it operates at a velocity that the traditional banking sector can barely even comprehend. Its strengths are defined by sheer, unadulterated power. Think 24/7, 365 liquidity. There is absolutely no closing bell here.
It offers absolute global borderlessness and massive information asymmetry. That means if you actually do the work, you can find life-changing opportunities way before the institutions even wake up to them.
But we have to be clear, the weaknesses are severe, and they are exactly why retail gets destroyed. You have zero regulatory safety nets, you face extreme structural volatility, constant smart contract exploit risks, and ruthless manipulation by predatory whale liquidity pools. If you step into this arena blind, you will be eaten alive.
So, why do we endure that risk? It's simple. 20 years and 6 months. This phrase represents the staggering hypervelocity of capital in the crypto market.
Because of the programmatic liquidity and the around-the-clock nature of the networks, a single crypto cycle can literally compress 2 decades of traditional stock market returns into a fraction of a year.
That is the asymmetric upside. That's the generational wealth acceleration vector that you simply are never going to find in a regulated, saturated fortress.
Which brings us to Section 3, the architect's bridge, synthesizing the portfolios. We are officially dismantling the either-or fallacy today. If you only choose traditional stocks, you're actively sacrificing the explosive generational wealth acceleration vectors of digital sovereignty.
But on the flip side, if you only choose crypto, you're trapping your entire net worth in a hyper-volatile roller coaster that will absolutely ruin your peace of mind and your mental state. So, we don't choose. We build a bridge.
You must become the architect, a strategist who bridges traditional foundational security with digital asymmetric upside. And why? To preserve your neuro fitness.
You cannot make elite financial decisions if you're constantly panicked by extreme volatility. By bridging these two worlds, you protect your psychological capital while systematically fast-tracking your timeline to your freedom number.
Think of it like this. Traditional stocks are your defense. They're your stable foundation and your capital preservation engine. You use them for predictable dividend defense, while crypto is your offense. This is your high-alpha strike team. You deploy capital here to exploit mispriced tokenomics and to track on-chain whale metrics for really aggressive growth. You absolutely need the fortress to protect you, and you need the strike team to conquer new territory. They work together seamlessly.
All right, Section 4, your Day 100 Audit, Calibrating for the Ascent.
We have covered immense ground over these last 100 days. And now it's time for a deeply critical cognitive task. As an architect, you can't just passively consume information. You've completed the first major phase of your transformation.
Now, you have to actively audit your entire financial kingdom. It's time to roll up your sleeves and ensure your capital is actually doing what your mind intends it to do.
First, pull up your all-weather asset allocation blueprint that we built earlier in this series.
Second, brutally check yourself for emotional bias. Are you leaning way too heavily into traditional stocks just out of fear, or are you overexposed to crypto out of pure greed? Find that imbalance.
Third, write down a definitive, uncompromising strategy that mathematically balances your need for structural security with your demand for digital asymmetric upside.
Take a moment today to really celebrate the 100 days of relentless work you've put behind you. But hey, do not get comfortable. Calibrate your instruments, clear your mind, and prepare for the next 265 days of this ascent.
Let this be the mandate that drives your portfolio from this day forward. Rule both worlds. Control the data, rule the cycle.
The fortress is built, and the strike team is waiting. So the only question left is, will you remain a spectator to the cycles of wealth, or are you finally ready to cross the architect's bridge?